The topic of today's talk in particular is US federal student loans, and particularly federal aid. There's a reason why we talk about loans in particular rather than federal aid, and I'll get to that in the course of the slides. But before we even get there, I'd like to talk a bit about coming through to Dublin. The more astute of you might have realized that I don't have an Irish accent. So I've moved here too myself, and I can tell you it's a lovely city to be in. You'll love it when you come. But there are a few sort of real things we need to talk about. And the first is the cost of living in Dublin. Now, depending where you're coming from in the US, you may have different kinds of experiences or expectations. If you're coming from a city like New York, Dublin is certainly considerably cheaper. But for a lot of the larger cities around the US, Dublin's actually a bit more expensive. And when we look at across the rest of Western Europe, there's only one city in Western Europe that sometimes gets more expensive than Dublin, and that's London. Now, of course, this depends on how you spend, what you spend your money on. And there's different ways to cut costs and different ways to push your prices up. But I just thought I'd give you a couple of averages over here. More specifically, and this is a fairly important thing for the cost of attendance for federal aid, is the actual cost of attendance in Dublin. As a student here, you will have a couple of annual set costs. These are your flights in and out of Dublin. If you are not an EU citizen or European Union citizen, you'll have to pay for a residence permit each year. And then you'll have costs like health insurance, PC maintenance, you'll have deposits for your rent, and so forth. Then you have monthly living costs. And I know what everyone does when they look at this table. They go and they look at the left-hand side and they say, oh, I'll be able to live on the lowest budget. We put the lowest there as a demonstration, but it really is. That's someone who's living really frugally. More realistically, most people are going to live in the median range. So roughly €2,000 per month for living expenses. And I should highlight, that's per month. When we look at the trimesters over there, you can sort of see a rough amount in euro, and we'll talk about the exchange rate in a bit, that we recommend for students to have for their whole year of study each year. Now, I should say that we haven't even touched on fees yet, and that will be part of, and it probably is already part of, a UCD offer letter. So please have a look at your offer letter for your fees. For most students at UCD, your fees are fixed at the year of entry, so they don't increase as you progress through your degree. There's one exception to this, and that is medicine and veterinary medicine. So if you're entering any of those programs, your fees may increase, but just about everything else stays the same. Now, one thing I thought I'd highlight, and I know it's kind of common knowledge, but be aware that these are the amounts we're giving you are not fixed amounts. It's like a sliding scale. So you can make different decisions while you're here to either increase your budget or decrease your budget. And I'd say give yourself at least a year. If you're on an undergrad program, allow for a year of feeling out what your spending habits are going to be like as a student. But generally speaking, everyone has a cost of attendance. And when we think of a cost of attendance, what we think of on one side is sort of a deficit. You're going to have your living expenses, your once-off costs, and your tuition fees. And on the other side, you're going to try and fill that hole. So hopefully you have some savings coming in. You may also be given a UCD scholarship. You may be able to get a scholarship through a third-party provider. And then you may have, and UCD does accept 5 to 9 plans, or VA funding. Same, we do accept, although I should say that VA funding is very limited at UCD, so do speak to us if you plan to use it. And then we do also certify loans through private companies such as Sallie Mae or Ernest Navient. And the main topic of today's talk, US federal student aid. So a little bit on that in particular. So UCD does participate in the federal student aid programs. I should say, however, that our participation is limited to the William D. Ford Direct Loan Program. So that includes subsidized loans, unsubsidized loans, and plus loans. So that's for parents or graduate students. This is a rule by the US government. Non-US universities cannot access Pell or Teach grants. So when we talk about aid or US federal aid at UCD, it's really limited to the loan side of the programs. Now, I should say, think about your journey coming to UCD. You as a student are in the driver's seat. We're not going to put you into debt unless you ask us to. So when you're coming to UCD, you are probably going to complete your FAFSA, which goes to the US government, and then they contact UCD. They send us a student aid report, and we get in touch with you. The university is responsible for a number of things. We're responsible for checking that you are eligible for federal aid, and we're responsible for helping or for originating your loans on the US system, and for requesting the money from the US Education Department. And we are regularly audited. Everything we do is in line with the US government's regulations. When you're done studying at UCD, you will work with your loan servicer, and they will work with you to repay your loans over the amount of time that works best for you. Now, you may already be asking, how much can I borrow? And there is a really simple answer to this. Well, we've been talking about the cost of attendance, so the answer is up to your cost of attendance. Nearly everyone can do this. Now, the simple sum for working out a cost of attendance for loans is like this. First, we take in your tuition and program fees. So these are your fixed fees that we know. And then we take average living costs, average essential costs that we know that students need to use to come to Dublin. And then we subtract any scholarships, sponsorships, or other financial aid. Now, this is formal aid. We're not talking about gifts from family or savings or 5 to 9 plans or even VA. Those don't get factored into the sum. We're only looking at other scholarships or sponsorships, and we're subtracting them from the big gap that we have for your cost of living. Now, when we send your cost of attendance, I should say that this is not a budget. It's not a recommended spend. What it really is, it's a loan calculation. What we're saying is this is the maximum that we're allowed to certify for you to borrow while you're studying at UCD for the year. There's another way of breaking down that question of how much I can borrow, and that's by looking at the kinds of loans available. So if you're an undergraduate student, and that this is not just at UCD, this is at every eligible university, you have the right to borrow between $3,500 and $5,500 each year in subsidized loans, $2,000 in unsubsidized loans, and then the parents borrow the rest, everything up to the cost of attendance, in Parent Plus loans. If you are a graduate student, the numbers are slightly different. Graduate students don't have access to subsidized loans, but they do have access to larger unsubsidized loans. And then graduate students borrow Graduate Plus loans. Now, there's a couple of things you might notice over there. If you're an undergraduate student, it is really important that the parent is involved. If the parent doesn't want to borrow loans or isn't able to borrow loans, then there is a rather large part of the cost of attendance that may need to come from somewhere else. And this is where private providers like Sallie Mae or Ernest Navient may be useful, or where working on savings might be worthwhile. Now, the more astute of you will have realized at this point, I have been talking a lot about loans in dollars and spending money in Dublin in euros. And if you've logged onto the exchange rates today, you'll see that on average today, a euro will get you about $1.05, maybe $1.06. Now, how do we do this? Important things to say is that everything we do with US federal aid, we have to do in US dollars. So we calculate your cost of attendance in US dollars, all your loan amounts are in US dollars. And when the US government sends UCD the money, it is sent in US dollars. Once you get to Ireland, all your tuition and living expenses are in euros. And any time that the money arrives in UCD's bank account and then into the student's bank account, it's in euros. It's processed in euros. So to do this kind of magic trick, we work with two different kinds of exchange rates. The first is a hypothetical exchange rate, and this is for our cost of attendance calculation only. And I have to tell you something, we work on a worst case scenario here. We don't use the real exchange rate. So for the coming year, the cost of attendance that we have set based on the worst case scenario is $1.20 to the euro. You'll notice that gives you quite a big buffer. It means that students often can borrow a lot more than they need. And that should be a fairly good sign that when you're working out your budget, it shouldn't be that you're borrowing up to your cost of attendance. You should give a bit of a leeway to yourself. And then there is a real exchange rate. This is anytime we do a transaction, anytime we receive money from the US government, which happens with every disbursement, or anytime that you send money back, or we send money back to the US government, it works on a real exchange rate. And that's often a lot lower than the cost of attendance exchange rate. I'm happy to take a few more questions on this, but we're going to move on to the next topic for now. And that's the timeline for federal aid for the year. Now we're currently sitting in March. I hope that if you're on this call that you've already started or completed your FAFSA, and the US Education Department is sending to UCD the student aid reports. We call them SARs. When we get a SAR, we manually calculate a cost of attendance for each student based on the offer that they have and the scholarships we're aware of. And we're already starting to send out these cost of attendance to students. Do bear with us. It takes a bit of time, but we do plan to have as many cost of attendance out as possible in the next few weeks. Once you get your cost of attendance, the very next thing you've got to do is actually work out what you need to borrow for the year based on what you're eligible for. And actually, before you do that, do check your cost of attendance. Make sure that we have reflected all the scholarships you have and that we're reflecting the tuition fee amounts that you are familiar with. Anyways, once you know what you want to borrow, you then need to go and sign master promissory notes, complete entrance counseling, and your annual loan acknowledgement. All of these are done with the US Department of Education on the studentaid.gov website. So UCD's only meant to check that students do this. We can't do this for them. You have a deadline, and that's the 31st of July. That's a deadline so that students can get their disbursements before the start of the September term in September 2023. Before that deadline, students should log into SISweb, and complete the US financial aid application. If it's not submitted by that deadline, we can't originate loans on time for the September disbursement, although we will try and originate them later if a student submits the application later. And the whole way through the whole process, we will send out documentation. So we send out cost of attendance letters. We also send out loan detail letters. They used to be called loan award letters. And these tell students exactly how much they're borrowing. Now, you may want to ask, I've mentioned disbursements, plural. There's a reason for that. And that is because due to US federal regulations, we have to break down disbursements based on the number of semesters in a student's program. So if you're coming to do a bachelor's at UCD, you're almost definitely going to be on a 2-semester program. And if you decide to borrow $50,000, you and your parents, then $25,000 will be dispersed in September and $25,000 will be dispersed in January. If you're coming into a graduate program, it tends to be a 3-trimester program, and we look at 33% dispersed at each point. I should say that the UCD tuition is charged on an annual basis, not a semesterly basis. But wherever a student's receiving federal aid, the UCD fees team agrees to only charge up to 50% of the tuition in September, and then the last 50% in January. That means that any additional amount over that the university receives, they refund to the student for living expenses. I'll give you an example of what that looks like. Bear with me. This is a graduate student, but the rules stay exactly the same for an undergraduate, even though we're only looking at 2 trimesters for an undergrad. But let's say we're having a look at a student called Siobhan, and yes, that's how you say the name Siobhan, or how you spell the name Siobhan in Ireland. She's doing a MSc in politics, which costs 20,500 euros. It's got 3 semesters, and she has decided to take out $40,000, and that's a gross loan. The US government will deduct origination fees. So that difference is the difference between the gross amount and the net amount. And the net amount is what they send to us. They'll send it to us in 3 batches, one for the start of each term or each semester at UCD. So the fees team will have already calculated that Siobhan should pay $6,833 or euros, euros at the start of the semester, the first semester. She's already good. She's paid her €500 deposit, and that already subtracts from there. And she has got a €5,000 scholarship from UCD. That already brings down the amount of fees that needs to be covered to €1,333. Now she gets her first disbursement, and you'll see the US government sends us $12,988. As soon as it lands in our bank accounts, it becomes euros based on that exchange rate. And you can see a nice big amount waiting in there, a surplus that then gets refunded to Siobhan for her living expenses. Come semester 2, a similar thing happens, except she doesn't have a deposit and her scholarship's already been used. So even though she gets the same amount of dollars, and with the exchange rate, a similar amount of euros is received, much less is refunded to her. And then in the last semester, you'll see with a different exchange rate, a similar thing happens. So we put this in as a bit of an illustration. Everyone's case is going to be different. It's going to depend on what you decide to borrow, whether you decide to pay more or less in. I'm going to move on to my last slide here. Now, this is just the very end of it. I will say a couple of things. The first thing is that we are here to help students with the federal aid process. We have a video like this one already associated with our emails. We have the handbook, and we really encourage people to read through the information available to them. It is very helpful. The second is that due to European data protection laws, we are very limited in who we can speak with. So we cannot discuss student accounts or student applications with their parents unless the student is copied on the email. If you're a parent and you want to talk to us, you're welcome to, but please make sure that your son or daughter, your child, is part of the email thread, and we will ask them to say whether we can share that information with you. If they say no, legally, we can't go anywhere. Lastly, what I'll say is that my colleagues in the North America Global Center are really well trained up to answer most of the questions that people have around federal aid, and I would encourage speaking with them if you have a chance. But you can also reach me and my colleagues in Dublin through federalaid@ucd.ie, and we will definitely get back to you. It might take a day or two, but we'll get back to you with an answer. UCD has a very useful set of websites on federal aid, and I'd encourage you to have a look through them. But also remember that the main loan provider in this case is the US Department of Education, the US government, actually. So do go have a look through the US studentaid.gov website. It's really helpful. They especially have a very useful loan simulator, which allows people to look through what their loan repayments will look like, depending on how much they decide to borrow. And this is part of sort of your general financial well-being. So I'm going to stop sharing now. And thank you very much for listening to me. I know there's a few questions already, and you're welcome to ask me many, many more. Before I get to the questions, what I will say is that the slides and this recording will be available to everyone who is part of this call. Please go through them again. I know my accent's a bit funny. Sometimes I talk a bit fast, so it helps to go and look through things again. So there we go. I'm going to stop sharing and I'll get to some questions.